Hello, welcome to the European Open Briefing for Thursday, April the 12th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is off its lows from yesterday. It fell on the back of rising concerns of potential military strike over Syria. Those geopolitical tensions still remain high this morning, but the dollar has managed to recover slightly closer to the 107 level. Safe haven gold has soared on those rising tensions, and oil prices are also sharply up due to potential supply disruption if we get military action in the Middle East. The euro and the pound, though, are doing rather well at the moment. They're near two-week highs on the ongoing expectations of tighter monetary policy in the region, and commodity currencies are also doing surprisingly well despite that risk aversion we've seen since yesterday due to the possibility of military action in the Middle East. That's mainly boosted commodity prices, and in turn the commodity-linked currencies such as the Aussie and the Kiwi. And taking a look at the major pairs now, we can see the Aussie and the Kiwi are slightly firmer this morning. The Kiwi rather significantly actually at the moment. The loonie is slightly weaker. The euro and the pound both slightly up against the dollar, and the dollar itself has now just turned positive. Dollar index more or less flat, dollar yen slightly up. If you look at equities, though, they're all in the red as that rising tension in the Middle East is weighing on equity prices, though we do have some bourses up in Europe at the European Open. Moving now to the dollar, we can see dollar index yesterday did manage to briefly spike to the 107 level, but at the moment it's currently trading around 106.85, just below its 21-period exponential moving average. So yesterday those tensions heated up after President Trump tweeted that Russia should expect U.S. missiles, but later we did see a White House spokeswoman saying that all options are still on the table. Those remarks by the White House did somewhat help those tensions ease a little bit, and we saw a small recovery in the US dollar. But the dollar index, though, didn't see too much of a recovery. It's pretty much stuck near two-week lows that it hit yesterday. Overall, though, those losses are limited. We can see that dollar yen at least has been rather range bound for the past week. We did see some support coming from strong US inflation numbers yesterday. We saw both the headline and core CPI rates rising to the highest in a year. We also had the Fed's monetary policy meeting minutes, and they were on the hawkish side. It showed that some policy members were supportive of slightly steeper rate path, and also they did discuss that changing the Fed's communication to signal a policy shift to a more neutral or a restraining mode from the current accommodative stance. But of course, those geopolitical risks have offset those hawkish minutes and are weighing on the greenback at the moment. If you look at gold prices, we can see that big surge yesterday to a 2.5 months high, $1,365 an ounce. They've come down substantially to around $1,350 at the moment, but of course we have to wait and see what action the US and its allies will decide to take. France and Britain are most likely to join any US-led military action. The safe haven yen, though, didn't see too much of a boost. It did rise slightly yesterday and is slightly down this morning. The Swiss franc didn't see much reaction to that rising tensions in the Middle East. Oil prices, on the other hand, did get a major boost, mainly due to possibility of disruption to supply as given the fact that, of course, the Middle East is a major exporter of oil. We saw the Brent crude rising to the highest since November 2014, breaking above the $73 a barrel level, and WTI hit $67.45 a barrel. That's more than a 3-year high, and this comes despite the fact that we saw an unexpected jump in US crude oil inventories in the EIA's latest weekly inventory report. We can see WTI currently trading at around $67 a barrel. Let's move on to European currencies now. We can see both the euro and sterling holding near yesterday's highs. The euro hit 1.2395, sterling hit 1.4222. We did hear some comments from ECB President Mario Draghi yesterday. He said that he's fairly confident that the ECB will hit its inflation target, and he doesn't expect much impact from the US and China trade tariffs. We've got the ECB policy meeting minutes coming up shortly of the March policy meeting. That could potentially lead to some volatility for the euro. Sterling yesterday did come off its highs after we saw UK industrial and manufacturing data missing expectations for February. But we've got the Bank of England Governor Mark Carney speaking later today, so that will be watched. Sterling at the moment is trading around 1.4190. And finally, looking at commodity-linked currencies, we can see the Aussie, the Kiwi, and the Loonie not doing too badly despite the geopolitical tensions. They're all getting a boost from rising commodity prices, mainly oil. The Aussie hit a 3-week high of 0.7773 yesterday. It's slightly off those highs today. We did see a drop in housing lending in Australia for February, so that's slightly weighing on the Aussie. The Kiwi, though, is extending its gains. It hit a fresh 7-week high of 0.7387 earlier today. We heard comments from the RBN's then Assistant Governor John McDermott, who reiterated that the bank's new dual mandate, which now includes employment as well as inflation, will not make much difference to monetary policy. There were fears that the new dual mandate would make the RBNZ more dovish, but now it's looking like since it's not going to make much difference to policy, that's helping the Kiwi recover its gains, its losses. That we saw last year after the election back in September 2017. We also saw another rise in electronic retail sales out of New Zealand, so that's also helping the Kiwi at the moment. But the Canadian dollar is slightly lower this morning. Yesterday, though, it did hit a 7-week high, 1.2541. So those easing of trade tensions, both between China and the US, as well as the growing possibility of a NAFTA deal coming very soon between Mexico, US, and Canada, is helping the loonie, and of course the rising oil prices, which Canada is a major exporter of oil. So all of that is helping the Canadian dollar at the moment. And looking at today's economic calendar, we've got Eurozone industrial output numbers coming up shortly, to be followed by the weekly jobless claims out of the US. Other than that, it's going to be fairly quiet in terms of data, but we do have a number of speeches coming up. We've got the ECB policymakers, Cower and Whiteman, speaking later in the afternoon, and Mark Carney, Bank of England's governor, speaking at 19 hours GMT, plus of course the ECB minutes at 11:30 GMT. That's it from me. Thank you very much for watching, and have a great day.